So, seems like many people have already joined. I'll just make the introduction again. My name is Mark Saker. I'm the senior advisor on internal market and legal affairs at the Malta Business Bureau. We are the EU Business Office of the Malta Chamber of Commerce and Enterprise and the Malta Hotels and Restaurants Association. And thank you for taking your time out of your busy schedule to join us this morning on this very interesting event on the Corporate Sustainability Reporting Directive. It's surely a subject that is likely to stir the passions among us this morning. Without further ado, I would like to introduce our newly appointed president, Ms. Alison Mitzi, who will be taking over the reins of the NBB for the next 3 years to give her introductory remarks. Alison, please.
Thank you, Mark. Good morning, and thank you for the introduction. Thank you all for joining us this morning for this 1-hour information session to discuss the recently published proposal by the European Commission for a new Corporate Sustainability Reporting Directive. As a result of the way the world is evolving, businesses as well as citizens are becoming more aware of the social and environmental obligations, which, with this being reflected in the way organizations are operating and citizens are living their lives, and the increased expectation placed upon by stakeholders. This is therefore translating into more demands on businesses from stakeholders and investors, who are demanding more disclosure as to how they are affected from a sustainability perspective. In this context, the Commission decided to make this proposal to address different aspects. Firstly, to revise and strengthen the rules that have already been introduced by the Non-Financial Reporting Directive. Secondly, to ensure that there is accuracy on the data collected. And thirdly, to ensure that the data collected is of a comparable nature at a global level in line with environmental, social, and governance reporting standards, which is considered to be critical to support investors in their decision-making process. Change is welcome, and business must embrace this fact to ensure that they are prepared to weather the challenges of the short term as well as in the longer term. Nevertheless, as we always say, it is always important that a balance is struck where change must be brought about in a proportionate manner without placing unnecessary administrative burdens which may disrupt competitiveness. This regulatory framework is indeed needed in order to allow businesses to look at their business models and allow them to develop practical reporting capabilities on their sustainability without burdening them with unnecessary red tape. It is in this light that NBB is hosting this information session so that we learn about the new obligations that are emanating from this proposal. We are still, as you may appreciate, we are still very early in the legislative process, and obviously as a result of this, these obligations may change. However, considering that the first reporting deadline that the Commission is proposing is of 2020, is established in 2024, time is obviously ticking. So we start understanding what's coming our way in terms of this proposal. I will now shortly pass the floor to Mark Saker, who has already presented himself, who will give you a detailed overview of the Commission proposal. Following then, we will hear the perspectives from our experts on the subject. Here with us, we have Ivan Samud, who is the legal officer from the Ministry of Finance and Employment, Roberta Lepre, who is the managing director from WEAF Consulting, Kenneth Polucino, assistant company secretary from Siemens Fasens Cisk, and Carl Zammit La Rosa, manager at PwC. Following that, we will also allow some time for questions and comments from the floor. The NBB will keep doing its best to follow up with you on this matter, and as well as to keep abreast of political and legislative developments that are happening at an EU level. Thank you. I wish you have a meaningful discussion. Mark, the floor is yours.
Thank you, Alison. Thank you for your remarks. I also wish to tell the audience that if you wish to start asking questions via the chat function, I believe there's a questions function at the bottom of your screens. You may wish to do so and we will get to them later on during the event. And now, before starting my presentation, I hope you also don't mind me saying that I am boldly assuming that the majority of you are in a reasonably good mood this morning following the progression of Italy and England to the final of the European Championship. And this is generally a good thing for someone who is presenting a controversial proposal by the European Commission. So I am hoping my job will be slightly easier this morning. Of course, I do offer my commiserations to the followers of other teams. But yes, I do have the pleasure of presenting to you the proposed Corporate Sustainability Reporting Directive, which I will continue referring to as the CSRD for the sake of time. Before I start, just a small disclaimer. I am trying my best to not offer judgment value on the proposal. I'm here to present the facts as they have been presented by the Commission. Now, as Alison has rightly said, we are still early in the process, so that we may yet see changes to the obligations that I am about to present to you. Of course, this piece of legislation needs to go to both the Member States in Council and the European Parliament for their internal deliberations before they meet and agree upon a political way forward. I'm going to share my screen for a minute here. Let me just make sure that it's working. Can someone confirm that you are seeing my screen?
Yes. Yeah.
Okay, thanks. So, the Corporate Sustainability Reporting Directive, a bit of context. This was brought about with the Commission's new focus on the green transition, where basically the Commission is trying to bring about a greener Europe. One of the ways through which is through more sustainable business models. And one of the ways it was looking at doing this was through increasing business participation in sustainability reporting. We had that through the Non-Financial Reporting Directive. However, we have seen that there have been some issues with the Non-Financial Reporting Directive with regards to comparability. Basically, stakeholders need comparability, be they investors, be they clients, NGOs, the public, so that they can be able to base their information that they receive in accordance with global standards and be able to make more informed decisions. There was also a question of quality. It was claimed that the information currently reported is not sufficient, and they claim that a lack of quality in sustainability reporting can have knock-on effects on the economy in general, as investors would lack a reliable overview of sustainability related risks. There's also a problem of accountability, where problems in quality of reporting creates this so-called accountability gap, which high quality and reliable public reporting by companies can narrow. And this has been laid out for you here in this slide, in this sort of flow chart. As you can see, the problems for the users, that is the stakeholders themselves, and the problems for the preparers. We have problems for the preparers. There have been claims that companies don't know what to report, which standard should they follow, any additional information requests that are made to them by stakeholders, and of course the costs and administrative burden which come with it. There have been some significant changes from the Non-Financial Reporting Directive, mainly related to the scope, to the content, as well as the standards which are yet to come. We'll look at that in a second. The mandatory audit requirement, so-called assurance, the location of the reporting information and digital reporting, and we'll go into each of them one by one. So first of all, the scope. What has changed exactly with regards to the scope? Basically, we're looking at mandatory reporting for all large companies, and this time the threshold is over 250 employees, in accordance with the definition set out in the Accountancy Directive for large companies. It is also mandatory for all listed companies, all companies which are listed on the regulated EU markets. This includes SMEs, but excludes micro enterprises. There will be a 3-year phase-in period for listed SMEs, as well as a simpler reporting regime, and subsidiary companies will be exempted if the parent company reports according to the new EU requirements. It will be voluntary for non-listed SMEs. They may follow the simpler reporting regime that listed SMEs will be obliged to report on, but it will be voluntary for non-listed SMEs. In this regard, the Commission claims that its goal is to enable and not endanger SME participation in the contribution to a transition to a sustainable economy, to ensure that they start their sustainable operations from now rather than when it's too late. With regards to the content, these will be the topics that we will more likely need to report on. I won't go through them one by one. I'll just give you half a minute to look at the couple of slides here. We've got the list split up into environmental, social, and governance issues, the standard ESG information. And over here, we're also looking at delving deeper also into business strategy, as well as corporate governance. Because you can see over here issues like strategy, the role of board and management, due diligence, etc. There is also this concept of double materiality, which I believe is a new thing that is introduced with the CSRD. There's this nice little graphic here that I stole without a conscience from the European Commission, but I gave them the credit over here. Basically, the proposal introduces this double materiality principle, meaning that companies have to report about how sustainability issues risk their business, and also how the company impacts people and the environment. Moving on to standards, the European Financial Reporting Advisory Group, EFRAG, will be developing the draft standards, and they will be adopted by the European Commission as a delegated act. So this is important. It will be done as a delegated act, so the Commission will draft them and then get them approved by Council and Parliaments. There will be no co-decision procedure where the Council and the Parliament have the opportunity to make changes. They will only be consulted and they have a final veto, but that's it. Now, the way that they aim to make the standards is to cover detailed ESG topics, of course, taking into account the current EU rules and policies, for example, the green transition, the digital transition, as well as taking into account of global standards which already exist for comparability. Needless to say, the standards that will come out to be expected that the information to be reported is understandable, it is relevant and representative, it is also verifiable and represented in a faithful manner. A small timeline here of when we're expecting the first standards. They're expected, the first set, which will focus on sustainability and reporting matters, will be expected by 31st of October 2022. And the second set, which will focus on any complementary information, any sector-specific information, as well as the SME standards. You will remember from the earlier slide that SMEs will have a slightly lower reporting standard. Those will be expected by the 31st of October 2023. Now going on to the mandatory assurance requirement, another change from the Non-Financial Reporting Directive. It introduces this EU-wide audit requirement for sustainability information. This was not required before. It will start with a progressive approach, seeing as there is still the market capacity for sustainability auditing is a little bit of an unknown quantity. It will start with limited assurance, which is slightly less burdensome than reasonable assurance. However, the proposal also gives the option to the Commission to develop its own sustainability assurance standards, which will allow for a form of reasonable assurance for sustainability reporting. It will be done by default by statutory auditors, but member states have the option to allow any other accredited independent assurance provider. So, where should the info be reported? They foresee that this should be done in the management report. I know that this is something controversial. Like I said, I'm here to report the facts. They foresee that this is done in the management report. However, subsidiary companies that are exempted from reporting will need to publish only a consolidated version of the management report of the parent company, and then include a reference in its own management report that it is exempted from reporting requirements. The reporting is to be done in a digitized format. Companies will need to submit their financial statements and management reporting, which also includes, of course, the sustainability reporting in this so-called single electronic reporting format, or XHTML. Beyond what you see on the slide, this is something I don't know how to explain. However, one thing that we have information on is that they will require a sort of markup of the sustainability information only. A markup language is a computer language that uses specific coding like tags to define elements within a document, allowing the presentation of information in a way that both machines and humans can read. Now, member states, the obligation on them is to ensure that the required information is published electronically. Moving to the approximate timeline, this of course assumes that there will be an agreement between the co-legislators, between the Parliament and the Council on around Q1, Q2 of 2022. Only then will we know that by mid-2022, the first draft of standards will be ready, because the standards are being developed by EFRAG in parallel to the interinstitutional negotiations. By the end of 2022, as we have seen in the previous slides, the first standards will be adopted. And this is interesting right here, the last one. By 2024, it is estimated that companies will publish their first reports according to the new standards, which cover the financial year of 2023. As you can see, it's very tight. There's a lot of work to do before then, also not least with regards to actually finding an equitable solution for the Commission's proposal between the Council and the Parliament, and also ensuring that a balance is found where the interests of companies are also taken into account. That's it from my presentation. I'm sorry for speeding through it, but time was really not on our side today. I would like to move immediately to the panel, and I would also like to say that while the agenda has foreseen the last 10 minutes to be question, the last 15 minutes to be question and answer, I would ask participants that if they wish to start asking questions from now, so that we have them ready for when the panel, so that we have them ready to pose to the panel once you ask them, and also to be able to allow us to use that last 15 minutes for the panel should they have more to say. I just need to find a way to stop the screen sharing. Stop sharing, there we go. Okay, so I will reintroduce the panel. Thank you so much for coming, esteemed ladies and gentlemen. We have Kenneth Policino, Assistant Company Secretary at Farsons. We have Carita Zamitla Rosa, who is a manager at PwC, Dr. Roberta Lepre, Managing Director of Weave Consulting, and Ivan Sammuta, Legal Officer at the Ministry of Finance and Economy. Thank you, ladies and gentlemen, for coming. I would like to immediately open the floor by asking you one by one, first off, your perspectives on sustainability reporting, and particularly vis-a-vis this proposed directive. What you think of it? Anything you would like to share? The floor is yours. We'll start with you, Kenneth.
Good morning, first of all. Thanks, Mark. Sorry. I think the fact that we're talking of this CSRD, this new Corporate Sustainability Reporting Directive, only 7 years down the line from when the Non-Financial Reporting Directive was rolled out, I think it already is an indication that things are evolving and evolving fast. The experience with the Non-Financial Reporting Directive was an exercise, obviously, in transparency and with the amendments to the Companies Act. We, as a board of directors, it was important that obviously we comply with the law, but it was important also to divulge information. At the same time, it was important that we do not necessarily collect information, generate information beyond what is being disclosed. And obviously, we would steer away from divulging any commercially sensitive information. So the experience we have with the Non-Financial Reporting Directive has worked well. It was an improvement to what we had before, because obviously non-financial information was practically absent before the 2014 directive. So it was a bit of a balancing act undertaken each year. Where does the duty to disclose start, and where does the right to know end? What disclosure is properly due, and how much is enough, basically. The proposed directive we have today suggests that this is insufficient in the light of today's expectations. So the first consideration to make, to my mind, is that as a business, we have to change, we have to embrace change, and we have to adapt our ways of working. The reporting requirements which are being introduced are quite onerous. They will take time to adapt, but businesses are accustomed to adapting themselves, and this would be another thing which has to be factored into our operations.
Thank you, Kenneth. I'll move on to Carl before then coming back to each of you with any follow-up questions. Carl, over to you.
Thanks, Mark. No, I agree with Kenneth wholeheartedly. I think he mentioned a key point, which is the expectations. I think these are changing rapidly, especially in light of COVID and everything that's going on. Companies are not only expected to minimize their negative impact, but to actually play a role and to contribute positively to, these world challenges and local challenges that we face, be it climate change or pollution, waste, to diversity and all the topics that fit under the E, the S, or the G when we speak of sustainability reporting. But I think we also need to acknowledge that there's been a gap with the information that companies are disclosing and that information that investors need. And so I think while the NFRD was definitely a step in the right direction, I think now we need to change gears and take it to the next level, not only as Malta, but as a whole union. And so my sentiment at the moment is actually I'm a bit excited for the CSRD and what that will bring, and the fact that now we need to, like I said, take it to a next level and extend the scope. I know that Alison mentioned a key point at the start, which was the concept of proportionality. So especially for Malta and the large companies are only a few, and so we have the majority are SMEs. This concept of proportionality and not seeing the CSRD as this large overwhelming directive which is coming from abroad, but rather being proactive and seeing, okay, what is material for my company, and converting that to make it applicable to each and every company, I think will be an exciting part of every company's sustainability journey. So I'm excited for that.
Thank you, Carl. Roberta?
Sorry, I didn't realize I was still muted. So I very much share Carl's excitement. Obviously, this is a topic that is very dear to us here at Weave Consulting. And now we're seeing a shift in the sense that what we were suggesting and recommending to companies to do on a voluntary basis is now going to become, for many companies, a legal obligation. But other than that, I think going a step back, this directive actually changes the fundamental nature of what a company is, in the sense that traditionally the idea of a company is that it is a vehicle that is primarily there to serve the interests of the shareholders. So its primary duty was, and still is, even in our Companies Act, is to be responsible and accountable to its shareholders. Now with this directive, that is changing, and is changing in a very fundamental way. So it is not a cosmetic change, it's not a superficial change. We are now saying that a company is not just accountable to its shareholders, but it is really and truly accountable to society at large in a very tangible way. So I think that is very much something that's going to change our corporate culture, not only for those companies which fall within the scope of the directive, but also other companies who will naturally and organically also have to become part of that process of change. So I think that's the first thing. On another level, the concept of accountability and transparency is very much at the basis of what corporate sustainability mindset should be based on. So we are now seeing that this element of accountability and transparency is becoming, again, quite tangible. So there are specifications as to how these companies have to be accountable to their shareholders and stakeholders in a very detailed and prescribing manner, so to speak, which then brings me to the final point. So within a broader context, I wonder how this is going to be viewed by companies themselves when they might perhaps feel that the level of accountability and transparency that's expected from them sometimes will supersede what is expected of public entities or of the public administration. So my question is, will this also bring about a leap in the level of accountability and transparency that we'll also be expecting from entities which are not necessarily commercial entities, which do not fall part of the scope of this directive, but I think inevitably, once companies are expected to have that level of accountability, I think inevitably public entities and the public administration will also, to a certain extent, be held liable to the same level of accountability. That is what I foresee.
Thank you, Roberta. Very interesting points. Ivan, please, over to you.
Yes. Good morning. First of all, we would like to thank you for the invitation and for your very good presentation. We believe it is very good to have these events, as there is the possibility of exchange of views between stakeholders. I would like to point out that the Ministry for Finance and Employment, other ministries, and other authorities have been active on this proposal from its inception. In fact, we as Malta participated actively in the public consultation of the Commission and in subsequent meetings. So I would like just to make a small remark that there are now discussions at council level, and there is also the development, as you said, Mark, of standards that these are being done through EFRAG. I can say that the efforts being made by the Commission are welcomed. The objective of the proposed corporate sustainability reporting directive to improve sustainability reporting is good. Whilst I agree that such reporting is clearly in the public interest, the lack of details on current requirements would make it difficult for companies to determine what information to report, and virtually impossible for investors and stakeholders to compare performances between different companies. Therefore, the introduction of such reporting needs to be phased over a reasonable period of time, be limited possibly to listed companies and large companies only, and have SMEs and their auditors completely excluded, at least in the initial years, and then to have them reporting on a voluntary basis if they so wish. The fact that the EU Commission's proposal anticipates increasing digitalization of sustainability information is welcomed. Under the CSRD proposal, companies will have to prepare their financial statements and management reports in HTML format. Digitalization of company sustainability reporting is also in line with the digital finance strategy, which aims at enhancing access to data and reuse data within the financial sector. However, the introduction of electronic reporting of non-financial information on the ESEF model, the European single electronic format, which had to become in place in the beginning of this year, but due to the COVID, it has been postponed to the beginning of this year. This will have listed companies report their financial statements in an electronic format. So this model needs to be properly implemented. I consider that the introduction and implementation of corporate sustainability reporting, in addition to ESEF, would require the statutory auditors receive appropriate training on both matters so that they can adequately report and have everything in order. I am also of the view that the global dimension of financial sustainability, underpinned by interconnected financial markets, calls for coordinated action on all fronts so as to create a uniform standardized reporting for all financial players concerned. The initiative to achieve international standardization in order to facilitate cross-border investment in the area of sustainable finance is supported. It is important that these initiatives are done within the global framework, and to have these in view, there are various global initiatives, and as much as the European Union tries to align with the current international initiatives, it would be better because there would be a global framework. However, there will be differences, and this is the way forward. The European Commission is very active and wants to have this proposal legislated upon as soon as possible. So this will be the way forward. We try to adapt, and we try to make our voices, although we are a small nation, but we'll make our voices heard. Thank you.
Thank you, Ivan. Thank you all for your really interesting comments. I took some notes and have some questions of my own also, which I would like to pose to all of you because some really interesting issues have been raised. I would also like to encourage you that if you wish to reply to each other, please feel free. Just unmute yourselves. This is an informal discussion, and I'd be excited to hear your input. Carl had mentioned the issue of COVID costs, and I'd like to ask. Sorry, Carl had mentioned the issue of COVID, and I would like to ask all of you. In a time when companies are still rebuilding from the impact of COVID, I mean, there was obviously a very substantial hit to both their operations and as well as their financial resources. How viable do you see the introduction of this proposal in a time when companies are rebuilding? I mean, clearly. We are talking about not insignificant costs, both with regards to their human and financial resources. I mean, how do you think is the timing of this? Basically, do you think is it feasible to introduce such a proposal at this time? Again, I'm not giving a judgment value. I'm just posing some questions here. Anyone who wishes to answer, please feel free.
If I may, well. This process obviously entails costs. So obviously there's never the right time to introduce additional costs. But at the same time, one has, yes, as you rightly pointed out, at a time when businesses and whole economies are reeling from the devastating impact of COVID-19, I would have thought that businesses should have their cash flow protected. Rather than being called upon to assume additional costs. The thing is that although it is being mooted that the costs would relate to the setting up costs, the short-term costs, in actual fact, probably this will carry on in the medium and long term. Why? Because businesses have to comply, businesses have to keep abreast with developments. There will be definitely changes in standards as we go along. Carl, coming from PwC, would be able to tell us more about this, but I come from an accounting background, and we all know that the development of accounting standards and auditing standards did not happen overnight, but took decades and many revisions, and probably the process with these standards will inevitably take a long time to settle and to be perfected, if at all. So there are costs, and it is inevitable that companies would need to factor in these costs, not as one-off costs, but they should be factored in the organization's annual budget. This is a recurrent outlay, and apart from COVID, a recurrent outlay would be something important to all SMEs, because the costs are not insignificant, and also for those organizations who face financial difficulties. So, to my mind, it is important that businesses take note of this development. And here I want to make the point that although the directive speaks of reporting obligations on the part of the larger companies, let's put that way, or listed companies, let's not forget that with the supply chains and with the fact that larger companies outsource their services and products to the smaller organizations, to SMEs, it is important that even SMEs themselves, which do not fall directly within the scope of this new directive, of the proposed directive, they should take note of they should take note even as of now. The wave, as Roberta rightly pointed out, of additional disclosure, additional reporting, additional expectations is there. It will continue to grow, and it will encompass even SMEs at a later stage, I'm sure. So with regard to SMEs, pretending that sustainability is of no interest or no consequences to their business does not conveniently make it so. And they have to be very careful to follow events as they develop, and to prepare themselves for this additional reporting. One thing which I would like to add is that once the directive will bring about additional requirements in terms of resources, both in terms of quantity and quality of resources for companies, particularly at this time of COVID, it is important, to my view, that the businesses are assisted technically and financially to make this transition work, and work as smooth as possible. The objectives of the directive are not in any way in dispute. We all agree that we need to have this additional reporting, but the quicker and the smoother the transition, the better. And I think that if we put our heads together as business, as government, and all stakeholders together, we could make this transition easier on everyone.
Thank you, Kenneth. I've already got some very interesting questions from the audience. I'll get to them in a minute. Just like to ask. So, with regards to SMEs, they will. I mean, listed SMEs, of course, they have a slightly greater capacity than non-listed SMEs, but SMEs are indeed SMEs after all. Yet the obligations that are about to come out are clearly quite burdensome for them. How can they be helped perhaps from outside the scope of the proposal itself? What can be introduced for SMEs to be able to transition into this reporting regime? I think it's not outrageous to say that even non-listed SMEs, even though the obligation, there is no obligation on them to report, I think it's not outrageous to say that one time in the future, perhaps not in the too distant future, that reporting will also be mandatory for them. What do you think about this? How can they be helped to transition to this through this period?
Shall I, Mark?
Yes, please.
I think the fundamental issue here is not to view reporting as an obligation. So when I work with companies of different sizes, reporting on their sustainability efforts is something that I recommend. And I recommend it because at the end of the day, it creates an opportunity for them. So the fact that they can take action in relation to the different areas of sustainability, and that's important, I think, to highlight that sustainability is not just the environmental sustainability, it's the environmental, the social, and the governance. So actually making an effort in relation to these different areas and actually communicating to their stakeholders what they are doing in this field creates a big opportunity for them. So this is something that has also been studied, and there is actually a link between those companies that take sustainability seriously and implement it consistently, and the efficiency and performance of that company. So a company that actually takes sustainability seriously is going to be ahead of the competitors, is going to be able to use that persona, if you like, that effort to be able to relate to its consumers, also potential employees. Okay, so we go into issues of branding and corporate identity, but also more importantly, it will be able to also attract investors. Why? Because a company that does not take sustainability seriously is dealing with huge risks. And here also I would like to relate to the first question that you posed when you said whether this is timely within the context of a post-COVID recovery. And I think here it couldn't be timelier. Why? Because COVID has really exposed the negative impacts of businesses acting in a non-sustainable manner, but also our national economy, where sometimes, you know, certain aspects of it are indeed unsustainable. So COVID has helped us expose these risks, and it has given us a small taste of what's to come with the risks posed by climate change if we don't act and act fast. So really, yes, there's an additional burden, so to speak, placed upon those companies which fall within the scope of the directive. But at the end of the day, this is a small investment for them to be able to mitigate certain risks and ensure their viability in the medium to long term, I feel.
Definitely, if I may add, I think ESG goes straight to the heart of the way value can be created, and Roberta mentioned the opportunity, or destroyed. So even for SMEs, I think they need to even just start the discussion. I think my advice is think about these factors. You don't need to go from 0 to 100 from day one. Just start the discussion and assess and understand how your value is at risk and what you're doing to mitigate that risk, but also to create that value and create that opportunity. I think today, more than anything, you know, customers are putting their money where their mouth is and supporting or withdrawing their support from certain companies, certain brands, etc. And employees are voting with their feet. And where we're speaking of the importance of upskilling and the importance you mentioned of how can we help SMEs, I think we need to be upskilled as accountants and as auditors, but we also need to help, you know, companies upskill and learn what is E, what is S, what is G, what is your carbon footprint, how do you measure that? Because these things can get technical and they're not exactly straightforward. And as Kenneth mentioned, yes, there is a cost to this, and companies need to, I think, understand that, you know, they have to allocate a certain budget, but to also understand the economics of that budget, there is a return on this investment. So you're not just throwing good money after bad and, you know, putting some nice words in an annual report. Green investments actually do make a return. The challenge from our end and then is to value that. So generally the issue with this non-financial information is that as accountants, we like numbers and hard figures, right? We're like euros, show me the internal rate of return, etc. Whereas these intangible aspects sometimes get lost in that, and translating, you know, upskilling or training or the value of your board diversity or your value of reducing your carbon sometimes can be challenging to actually put a price on. But these projects do stand on their own economically. And so the point is, the mission of a company to increase your shareholder value is not distinct from tackling sustainability issues. They're one and the same.
Thank you, Carl. In this vein, I have an interesting question from the floor, which again I would like to pose to anyone from the panel who wishes to answer. And just find it. Yeah, okay. So there is definitely an element of understanding about why should shareholders have to be informed about risks to their investment. This is something this is a concept which we have been applying for years, and it's something which is perfectly understandable. The question is this: why should NGOs be entitled to get access to their reports and hold companies accountable for their operations? This was the question from the floor. So basically questioning the element of accountability. Why should non-commercial entities, I think Roberta had mentioned before, why should non-commercial entities be allowed to hold companies to account?
Mm-hmm. I think this goes to the 3P principle, so people, purpose, profit. So this is the concept that if we focus solely upon profit as companies, there is going to be an impact on the other two pillars, the people and the planet pillars. So unfortunately, very often when a company is not mindful of the impact that it is having externally on people and planet, it can sometimes create damage, which also translates into costs that somebody else has to pay for at the end of the day. So it is a little bit about profiting at the expense of others. So the idea of companies being accountable to the external stakeholders, it is because companies are expected to profit in a way that does not harm people and planet. So looking at the impact it is having beyond its immediate circle of stakeholders, of impact, but looking at the broader stakeholders and actually acting in a fair way vis-a-vis stakeholders. So just a simple example, a company that is operating or a factory that is operating and it is polluting, that is going to create, for example, respiratory problems on the people that live in that neighborhood. So aside obviously the health and the social implications of that, there are also financial implications to that. So why should a company be profiting and then somebody has to make up or pay for the damage that it is causing? So this is the concept why external stakeholders should expect accountability from businesses. But I also think that many businesses nowadays are already shifting their mindset. I can honestly say that I have come across many ethical business leaders locally who are already very mindful on these issues. And I think the transition for them will obviously be less painful. It will be more painful for those who are acting in a way which does not take account of these factors. So it will more than anything be a culture shock, so to speak, for them.
Indeed, thank you so much for your comprehensive reply. I have another question from the floor. Let me just read it properly so that I can paraphrase it. So yeah, also there is agreement that companies should be more transparent when it comes to ESG issues. And one should also highlight that the mandatory obligations proposed in this directive seem to be too restrictive, complicated, and costly to maintain and implement. Whereas GRI standards, these are the global standards, unless I'm not mistaken, offer the possibility for opting for either core reporting or comprehensive reporting. Whereas what is being proposed here seems to be more in line with comprehensive reporting. What is your take on that, esteemed guests on the panel?
So at the moment, I'm very familiar with GRI. So just to explain a bit, the core reporting versus the comprehensive means that certain companies can still abide or still report in line with a reporting standard, but rather than take it all on board and have to do everything from A to Z, you can pick and choose based on certain standards which apply to you. So that gives a certain element of flexibility while still ensuring the quality and the consistency of reporting. So that is something very flexible, which the GRI allows for. At this point, we don't have any visibility on what the standards will look like. Like Kenneth mentioned, these take time. It's not just something which is written overnight. But what is exciting is that, yes, we're actually moving towards a set of agreed upon standards. So one issue and one challenge at the moment is that the reporting landscape is very fragmented. In providing consultancy services, companies might not know, do I look at the Commission's proposals? Do I look at the GRI? Do I look at what the US is doing? So it's a bit of, there's a lot unknown. So the fact that the EU has acknowledged this and is now committed to, coming up and drafting an official set of specific standards is definitely something which is very good. And the fact that now that we're probably going to have a separate set of standards specifically for SMEs will probably give this flexibility. So I don't think that it'll be a one size fits all approach.
Thank you, Carl. A couple of other questions from the panel as time is not on our side. There is a member of the audience who asked, will the directive improve access to finance, particularly vis-a-vis the Green Deal and digitization of industry? So I think this goes back to the issue of whether banks are actually looking at sustainability information or not. Am I correct in saying? Would someone like to reply?
Sorry. Yes, I must say that whereas in previous years the banks would only focus on the financial aspect of the facilities they give to clients, there is definitely a higher emphasis apart from the financial aspect, but there is also another emphasis now which is coming in on the sustainability aspect, something which one has to be aware of. And this will apply not only to those companies which fall under the scope of the new directive, but also generally to SMEs at large. So even here, SMEs have to be on the lookout that the time when you just had a viable project, viable in terms of finance, would be enough to agree with the bank to obtain finance. Those days are running out. So we have to be prepared as a business community to entertain this new development. I must say that as an industry, even during 2020, when there was when we had and we still have the COVID pandemic around, the need to achieve sustainability and, for example, the circular economy, which has started off with the EU, but is also being replicated outside the EU. I think that thing has this development will see things change, and businesses has to take note of that, as I said before. So we have, as a business, we have to add value, we have to retain our competitive advantage, but we have to manage these new requirements in an evolving world.
I didn't realize I was muted. Thank you, Kenneth, for that comprehensive reply. A few more questions from the floor. It seems like this is generating a lot of interest. We have a member of the audience who asked, is there a possibility that the comply or explain principle is introduced so as to help companies transition? This was the case for listed companies where corporate governance reporting was introduced. Now, me not being from an accounting background, I have no idea what the comply or explain principle is. So I'm fully relying on your assistance here, members of the panel.
So what this means is that you're either complying with the regulation, and if you're not, you're just explaining why. So Kenneth mentioned the Sustainable Finance Disclosure Regulation, the SFDR, which came into force and which is pushing out of banks and insurance, pensions, etc. companies to disclose this sort of information, and they also have this requirement. So this is definitely something which is practical, of course, and probably something which will feature. But like I mentioned earlier, we don't have any visibility of this. The directive itself is another proposal, let alone what the standards will look like. But it is likely that potentially this could feature as well.
Okay, that is very clear. Now, someone else asked, and I think this is really interesting, especially when we take into account competition from businesses from third countries, the US, China, etc. It's really tricky, I guess, to find the right balance between competitiveness and sustainable operations. For example, corporate disclosure. How do you find this balance? Do you think that this proposal strikes the right balance?
I think it is a reflection of the market in the sense that, as Carl mentioned earlier, there is a growing demand for products and services which are ethical. And there is also research, not local, but I would presume that the trends will follow even locally, that consumers will prefer a product or a service, even if it's costlier, if it is proven that it is coming from ethical sources. So in terms of competitiveness, I think what we need to understand is not that ethical products or services are costlier, but that other products and services are too cheap. It does not make sense that they come at that price. And what is happening behind the scenes for that product to be brought to market at that price. And I think as time goes by, consumers are becoming more and more sensitive to these topics, and they will, in a sort of natural way, not go for products which are sourced unethically. Of course, I understand this is going to take some time, and it's not as simple as it sounds. But from a competition, from a competitiveness viewpoint, I think that's what needs to be borne in mind.
Thank you, Roberta. There is one final question before we close, and I think I found one that I can answer finally. It's basically asking about whether we think that there will be scalability in the content of what needs to be reported by SMEs. Also, I think that imposing sustainable reporting on quoted SMEs will have a negative impact on SMEs seeking to raise finance through the capital market, as they will have to bear the costs of compliance with sustainability reporting when non-quoted SMEs do not. Now, on the question of costs, we've already gone through that comprehensively. So I will answer the question on scalability, which is something that we can reply with factually. Well, the Commission have promised that there will be a simpler reporting regime for SMEs, which would be mandatory for listed SMEs and voluntary for non-listed SMEs. Now, what those standards will look like, we have yet to see, because they are expected on the 31st of October 2023. However, it's definitely something that we will be keeping a very close eye on. So I'd like to thank the audience for their questions, and I would also like to turn to you, the panel, to see if you have any final comments before we close off.
My final remark is that although a directive is coming, this is a repetition of what I stated earlier, but I think it's really important. We must not look at this as an obligation. We really must look at this as an opportunity, and there are opportunities to be had. And also bear in mind that there are some costs, yes, but it's more of a small investment, so to speak, that can give a solid return. So I think it's very much about the mindset and how we approach this.
Thank you, Roberta. Anyone else? Kenneth, Carl, Ivan?
What I would suggest is to not think of this in isolation, but to link it to your strategy. Okay, so company is not about just reporting, but it's about asking questions like, why are you reporting, and to whom are you reporting, and what is the purpose, and linking that purpose to your strategy, and to not be overwhelmed. I think, like I mentioned, this is something potentially new, which can be scary, but it is also exciting, and to just apply it to your company as may be applicable.
Thank you, Carl.
As my colleague said, this has to be seen in the general framework of the European Green Deal. There's the CSRD and the taxonomy regulation. So it's more to be taken as an opportunity than, as Roberta said, to take it as a cost.
On my part, I would say that this is another challenge which has to be taken up. But at the same time, we are used as a business community taking up challenges to protect our competitive advantage and this without dampening our entrepreneurial spirit. So I look forward to the introduction of this directive, and at the same time, hopefully we are prepared enough from an early stage to take this on board and move forward.
Thank you everyone, and thank you also to the members of the audience. From my end, I would like to thank you all for your participation. I know it's a really busy time, and let's be honest, we're all tired of webinars and meeting online, and I wish that we could meet in person. Maybe soon in the future we will. From our end, from an NVB perspective, we are following this proposal very closely, as well as the negotiations that have started in Council and are about to start in the European Parliament. We will do our best to keep you all informed via our social media, via emails. Do read our emails. Don't just ignore them or delete them. There can be some useful information in there sometimes, not always. Thank you all. Thank you, members of the panel as well. Thank you, Alison, and have a good rest of the day.
Thank you. Ciao, ciao.
Thank you.
Bye.
Bye.